Welcome to the latest Motley Fool Scoreboard. I'm Anand Chokkavelu, and we've got longtime fools Lou Whiteman and Tyler Crowe giving a 1 to 10 rating to the company that would prefer a 300 to 850 scale. It's Equifax, ticker symbol EFX. First, we'll rate the strength of Equifax's business, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Lou's at a 7. Tyler's at an 8.
I think we misconstrue like invincible with things that we like, but you can be an unlikable business and still be invincible. And I think Equifax really falls into that category for a lot of people. You know, the personal credit and background check business, it's an oligopoly between, or oligopoly, mispronunciation
Oligopoly?
there, between it, oligopoly. There we go. Between it, TransUnion, and Experian. Like how many companies can basically experience like this massive personal data hack that Equifax had way back in 2017? I think that was like the news in the news cycle for months on end, and it barely registers anymore, not just on the news, but also in its like earnings reports and things like that. It's also branching out into some other identity confirmation, fraud detection sort of areas of the business, working with the government and private businesses and things like that could boost growth and profitability and get it less tethered to like personal credit and mortgage checks or checks for mortgages. And also there's a nice kind of uptick here where it basically converted all of its legacy systems to the cloud, which should improve profitability as well.
First off, we have to give a gold star to Anand for that, for the intro to 300 to 850, because that's a great line. So just got to get that out of the way. There you go. Equifax, like Tyler said, I don't really want to talk about it. This is a business I love to hate, but I do respect that. You know, I respect that. And I think Tyler's exactly right. They do a good job of filling a need. In recent years, they've pushed into the cloud. They've modernized business. They've gotten into these kind of new related areas, which I think makes sense. You know, with FICO, Fair Isaac, I at least see the potential for replacements on the horizon, but Equifax and its competitors, they have a good thing going. It looks stable. So I might rage against them, but I got to respect the business.
For management, a 10 is Warren Buffett. A 1 is Homer Simpson. Lou's at a 7. Tyler, you're at a 6.
Most of the time when we talk about management, I care more about like how management's incented, if anybody's been watching these videos. And again, my whole score comes down to its executive compensation package, and I absolutely hate it. I think it's poorly aligned. There's a lot of, grow for growth's sake versus, per share value, high returns, things like that. And to be honest, if you look at the amount of money that their management has been making over the past few years, it really looks like 8-figure participation trophies than actual company performance that haven't really been well aligned with shareholder outcomes.
Yeah. It's worth noting, Tyler, you mentioned the 2017 scandal. The Mark Beggar, who's the CEO, came in 2018. And so it's kind of to his credit that we don't talk about this anymore. He's coming up on retirement age, but in the fall, the company announced to be staying past 2025 for some stability. It's grown revenue by 50% during his tenure, and market cap has grown at a 14% CAGR. A lot to like. I still have questions about the eventual transition given his age, but he's done well in running this business.
For financials, a 10 is a fortress. A 1 is yikes. Lou's at a 6. Tyler, you're at a 7.
Yeah. The company's gone through like a significant CapEx round. Like we were talking about this conversion to the cloud, but, uprooting legacy systems that were, in for 20, 30 years. That's going to cost quite a pretty penny to do that. And so with that transition largely complete, I think there's going to be a free cash flow conversion that's going to go way up. We're already starting to see that. And those benefits should start to flow through the rest of the business with debt pay downs, enhanced shareholder returns, dividends, buybacks, hopefully things like that I think will make its financials look a lot better in the upcoming years.
They just reported a solid quarter, 7% revenue growth. Pretty good considering the mortgage market and the general questions about big macro that sort of weigh on this business. Management did sound a cautious tone about the second half, so I don't know if, what the upside is from here, but nothing really to worry about. Balance sheet, I'd like to do a little work there, but not really worried about it. Overall, fine. Not a reason to buy necessarily on the balance sheet, but not terrible. So 6.
Lou, let's move on to valuation. How well will Equifax's stock do over the next 5 years? How safe is it? 10's a sure thing, 1's a lottery ticket.
So I mentioned just now that management was a bit cautious about what's to come. This is a stock trading at 32 times expected earnings. It can outperform if the economy remains strong and demand for its services remains strong, but that is an if. I'm not too worried. I would never short this, but I end up at market perform again, 5 to 10%. For safety, a 7, because this is a strong business and it's not going away.
I landed on a 5 to 10 with a safety of 8. And I kind of debated this score versus like a higher return, but a slightly lower safety score. And I just landed here because I think mortgage application services should tick up in a rate cutting cycle. I think there's a lot of pent up demand in that regard. And its new business lines should, in theory, accelerate growth. And the reason I'm just going to simply be conservative is, theory doesn't always translate into execution. And when we see execution actually translate here, I might actually go back and change that.
Time for everyone's favorite Top It. Lou, is there a company in Equifax's space you like better?
I think, better is hard, but somewhat related. Upstart, if they figure this out, I do think that that's more my sort of growth stock. There's a lot more risk there. The safety score would be almost, just above 0. But I think I'd rather check out Upstart and kind of take my chances than to just kind of go with the incumbent here.
So Lou already mentioned it earlier with FICO or Fair Isaac Corporation. And I'm going to use Lou as an example here because he likes to talk about TransDigm a lot, which is a defense company. And part of the reason he likes it is basically it gets hauled in front of Congress a lot for what they call egregious pricing on like spare parts for really, really old planes that they have to make one every 5 years. And despite all of the, pounding the gavel at them and shame on you, sir, in front of Congress, nothing happens. Margins stay the same, growth stay the same. I think FICO is kind of the same thing. Everyone complains about egregious price hikes at FICO, and we're even seeing like the head of the Federal Housing Authority, basically, shaking his fist at FICO right now for price hikes, but no one's going to stop using it. And that's kind of why I think it's going to do so well.
Moody's was another one post financial crisis. Oh no, we're going to find a better system. Nope, no, we aren't. Thanks to both Lou and to Tyler, they've given Equifax an okay overall score of 6.6 out of 10. If you convert that to a credit score using my rudimentary math, Equifax would have a 663. That would be a fair credit score on its scale. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Quest Diagnostics. Till then, Fool on.